let's unpack this. In today's deep dive, we're taking a close look at a stack of sources that reveal some fascinating and potentially pretty impactful shifts across global economics.
Definitely. We're seeing everything from central bank politics, some surprising trade tactics, and, well, major financial ripples.
Right. And our mission, as always, is to pull out the most important nuggets of knowledge, give you that shortcut to being well-informed.
And what's really interesting here, I think, is how these things that seem separate, they're actually deeply interconnected.
Absolutely. So we'll explore those insights, try to help you understand not just what's happening, but why it really matters for the bigger picture.
Exactly. Where should we start?
Let's begin in the world of central banking. First source is titled Musical Chairs.
Ah, yes. Musical chairs. This one highlights the start of a succession game, really, at the Federal Reserve.
A succession game. How so?
Well, Governor Kugler resigned early, like 6 months before her term was up. And that creates an opening, a seat that the president can now fill with Senate confirmation, of course.
Which means more direct influence.
Potentially, yes. More direct influence on the Fed's policy decisions, especially, interest rates.
Okay, and speaking of potential influence, the next source, the Battle of Kevin's, seems to give us a peek into who might be, well, at the center of this.
Right. The Battle of Kevin's. This source gets specific. It says the president has indicated the next Fed chair will be a Kevin.
A Kevin. Any particular Kevins?
Two main contenders mentioned. Kevin Hassett, who's apparently expected to be appointed governor soon anyway, and Kevin Warsh.
And the goal here?
Seems pretty clear. Apply pressure from the inside. The aim is to secure rate cuts.
But will that actually work? Especially for longer-term yields.
That's not a given at all, and it raises that really important question, doesn't it? What does this mean for the Fed's independence?
Exactly, that perceived autonomy.
Yeah, this kind of internal pressure could, challenge the market's trust, could lead to some unpredictable reactions from investors.
Okay, but can a couple of appointments really steer such a huge institution, especially if its own data suggests otherwise? Let's connect this to the U.S. economy, specifically labor data. The source, adjustments.
Good transition. Adjustments. This points to a, let's say, not-so-rosy picture for the U.S. labor market lately.
How so? What's these two?
Well, the critical thing here is that the initial numbers, like job creation, wage growth for this year, they've been consistently revised downward, month after month.
Okay, so the first reports look good, but then...
Exactly. They get walked back. And this has led to questions about, the data collection itself, even if maybe the data's been used politically.
Uh-oh. That sounds tricky.
It is. The source points out the BLS director was fired, and there's a new acting commissioner.
With a specific mandate?
Apparently, yes. To ensure fair labor statistics, whatever fair means in this context.
Right. And the irony here is?
The irony is, if future numbers suddenly start looking, let's say, artificially good, the Fed might look at that and say, okay, economy's strong, no need to cut rates, which of course goes against what some political figures seem to want.
Wow, okay. So... conflicting pressures there.
Yeah.
Let's shift gears now. Move to international trade and tariffs. The source, Golden Tariff.
Sounds intriguing.
It is. Golden Tariff. This details the U.S. imposing a pretty hefty 39% tariff on specific gold bars.
Specific bars. From where?
From Switzerland,
Right.
Which is, the world's biggest gold refining hub. And a key source for physical gold delivery for COMEX, the main U.S. futures exchange.
39%. That's steep. What's the immediate effect?
It abruptly tightens the supply of deliverable gold in the U.S. market, just like that.
And the purpose behind such a specific move?
Well, the source suggests a possible and, frankly, kind of audacious purpose.
Which is?
For the president to potentially revalue the U.S.'s own substantial gold reserve.
Revalue them. By pushing up gold prices with this supply squeeze, the source suggests this could theoretically create hundreds of billions, maybe even over $1 trillion, almost out of thin air.
Whoa. Okay, that's a big claim. And it makes you wonder about tariffs more broadly. How do they really work? Our next source, headline versus effective tariffs, digs into that.
Right. It's a classic debate, isn't it? Who actually pays the tariff? The consumer here or the exporting country?
And the evidence is?
Headline versus effective tariffs highlights that the evidence has been, well, kind of murky, unclear.
Okay.
It introduces this key difference. The headline tariff rate, the announced average, which might be, say, 17.7%, versus the effective average rate that's actually collected.
And the effective rate is?
Much lower, closer to 8%, according to the source.
Why the difference?
Because if a tariff is put on goods that people then stop importing altogether, that tariff collects $0. It has no effective impact on revenue, even if it changes trade patterns.
Oh, I see.
So if tariffs don't really discourage trade much, then that effective rate is likely to creep up towards the headline rate. Meaning we could see inflation pick up more noticeably, perhaps before the end of the year, as more tariffs actually get paid.
Interesting. Okay, so while tariffs are being debated and imposed, are countries finding ways around them? Let's look at transshipping.
Yes, transshipping. Now, the term just means transferring cargo between transports, usually.
But it has a new meaning here.
Kind of a new connotation, yeah, especially in the context of US-China trade.
How so?
Well, since China faces higher US tariffs, goods are being sort of triangulated, sent through other countries first before they land in the US.
Like routing them indirectly. Which countries?
Vietnam is a key example mentioned. The source shows China's direct exports to the US going down significantly, while almost coincidentally, Vietnam's trade with the US spikes upwards.
Right, so they're essentially arbitraging the tariffs.
Yeah. Pretty much. It's a tactic to get around the higher duties. And the source suggests this activity might even tell us something about how close, or maybe how far we are from an actual US-China trade deal before that November 10th tariff deadline hits.
Fascinating. Okay, one last area to cover. Let's shift to the global financial system. Some Eastern worries here, starting with Japan.
Yeah, Eastern worries. This points to a bit of a bumpy start to the week for global markets, and a key driver seems to be Japan.
What's happening in Japan?
Their 30-year government bond yield rose significantly. It's happening as the Bank of Japan, the BOJ, is trying to normalize its monetary policy.
It's normalized, meaning?
Meaning trying to step back from things like yield curve control. That's where they were artificially keeping long-term bond yields low.
Okay. And why is that causing worries?
Well, the BOJ still holds a massive amount of Japanese government bonds, like 50% of the total market. It amounts to something like 260% of Japan's GDP.
Wow.
And as yields rise, the value of those bonds falls, leading to huge paper losses for the BOJ.
But the connection to the U.S.?
Crucially, the BOJ also holds about $1.1 trillion in US Treasury bonds. So if financial pressure forces the BOJ to start selling those US Treasuries to, say, cover losses or manage its own currency...
That would create selling pressure in the U.S. market.
Significant selling pressure, yes. The source even raises the specter of a major disaster, maybe reminiscent of the 1998 Asian currency crisis.
A sobering thought, which leads to the question they pose. Will this time be different?
Exactly.
Will it? So here's where it gets really interesting, putting it all together. We've seen these potential shifts in central bank personnel, questions about labor data integrity, strategic, maybe even audacious uses of tariffs, creative ways to get around them.
Right.
And now these potential shockwaves starting in Japan's bond market that could hit the U.S. What stands out most to you about all these interconnected forces?
You know, if we pull back and look at the bigger picture, it really highlights that in this complex world of economic signals, well, understanding the motivations behind policy decisions is just essential.
The why behind the what.
Exactly. And understanding the often unseen ways these decisions actually play out across the globe, it's not always obvious.
So what does this all mean for how you, our listeners, should think about economic stability and this profound global interconnectedness going forward?
Yeah, perhaps the key takeaway is just how surprisingly fragile yet deeply linked our global economic system really is. Makes you wonder what the next unexpected connection might be, doesn't it?